So
Right.
we're left to fill in the blanks.
Not only that, think about how perfect it would have been for.
Well, good afternoon and welcome to Voices of Faith Transforming the Community. The mission of Saginaw African American Pastors, known as SAP in the greater Saginaw community region, is that we are a faith-based Christian group dedicated to addressing social and economic, educational issues that evolve around our community, in addition to health and all the other things as well. And we want to do that with faith, strength, and boldness in order to ensure that racial equity is the experience of all citizens in the Saginaw County. So basically, what we really do is we educate, we engage, we advocate, and we collaborate. My name is Dr. Craig Tatum. I serve as pastor for New Life Baptist Ministries and as president for Saginaw African American Pastors. I'll be your host on today, and my very special guest on today is again, or I'll just call him Mr. Numbers for today, Mr. David Brown, who serves as vice president for Isabella Bank, and part of his expertise is commercial lending. And so before I go any further, I want to welcome again the Saginaw area, Saginaw County area, Midland and Bay City. I want to throw a plug out so you know that, hey, we know you're listening as well. And trust me, over the weeks to come, we'll be bringing in again guest presenters from those regions to talk about services that can benefit you. Our whole goal is to try to empower members in our community so that they can live better lives. So, Mr. Brown, welcome. And before we go a step further, tell us a little bit about yourself.
Well, thank you, Dr. Tatum, for having me today. I'm honored to be here. It's a pleasure to be able to join you today. I'm excited about what you guys are doing as SAP, and I'm just ready to get into it today. So, Mr. Numbers, you can call me, Hey, I love to talk about money. It's kind of what I do, so I'm glad to be here. But like you mentioned, I'm vice president at Isabella Bank.
Mm-hmm.
My role is a commercial loan officer, and I've been doing that for about 12 years.
Wow.
But I have about 25 years of banking experience.
My goodness.
The grades are starting to come in.
Okay.
But I've been fortunate and been blessed to grow up in Saginaw and start a career, plant some roots, raise a family here.
Excellent.
I love the area, and I really, really enjoy finance and economics and banking. So I feel blessed to be able to have a career in that.
Excellent. And I think for the listening audience, again, our whole goal is to empower you. So I hope you got your pencil and pad ready. Hope you're ready to take some notes on today, because this is part one of a continuous series on doing better with your money. Now, I'll be the first one to throw my hands up. Matter of fact, I'll throw both of them up and say, I know I can do better with my money. And I know some of you out there are probably doing the same thing, but sometimes you get in a rut. You don't know what to do. You don't want to make the sacrifices. And so today is just part one of a series of conversations that can help you do better. Now, you need to understand this, that you're not going to see, change overnight in the way you think. It's a gradual process. You didn't get in trouble overnight, so it's not going to happen overnight. But if you follow, if you listen, if you heed, I promise you over time that things will get better. So one of the first things I just want to ask you today, Ms. Brown, is given the times that we live in and the technology at our fingertips, is it still necessary to have a banking relationship today?
Great question, Dr. Tatum. The simple answer to that is no. There are people that today they live normal lives, successful lives.
Mm-hmm.
They go on in their day-to-day process without a traditional banking relationship.
Okay.
Like you mentioned, technology allows us to be able to access our money,
right?
Transact business in various different ways, which is great. But if you think about what the essence of a bank is there for, it provides structure for you.
Right.
If you're trying to create discipline for savings or investing, but it also protects you. There's protection within that banking industry that helps you. Fraud is very, very prevalent right now. There's also times where you just need a a financial advisor, someone that
Correct.
can give you some advice or open up the idea to new products or services that you may not have access to.
Mm-hmm.
A lot of the technology that we do have access to, I won't name names of different apps that we can use or
Right.
financial tools out there, but sometimes the issue is there's no support system behind it.
Mm.
So if you do run into an issue, the 800 number leaves you on the line for minutes or hours
Right.
in a day, versus being able to go and see and talk to someone face to face. So I would encourage individuals to please use technology,
Right.
but also there's a benefit to having a banking relationship, especially as you want to grow, and especially as you want to grow not only in your finances, but in your knowledge, that they're there to help you as well with that.
And I think that's critical for people to understand that number one, you got to trust somebody.
Sure.
And number two, we know that banks are trustworthy.
Mhm.
We're going to talk a little bit more about this idea of fraud and how it is now almost like a tsunami happening all across the country. People are losing tens of millions of dollars
Mhm.
because of certain things. So we're going to talk about how to protect ourselves. But the main thing that I'm sure our listening audience wants to hear, and I'll talk, I know you want to hear, so I'm just going to talk about it. So talk to me about credit.
Okay.
Why is credit important? What's a good credit score? And how can someone improve their credit? Now, I hope you got your paper and pencil. I hope you're listening, because this is for everyone. So tell us about why credit is important and all the other stuff.
Sure. Credit is a tool to help you with financial growth.
Okay.
It's a wealth building tool.
Hmm.
And I use the word tool because credit in itself is not good or bad. Similar to a chainsaw. A chainsaw is a tool in itself. It's not good or bad.
Right.
However, depending on the maturity of the individual, their knowledge and their understanding of it, it can either help them or it can hurt them. Right?
Okay.
Or someone else.
Right.
But in essence, credit allows you purchasing power when you don't have the tangible monetary asset in hand.
Gotcha.
I'll give you a great example. Purchasing a home. Homes cost $100,000 to $200,000 to $300,000. The majority of us don't just have that money lying around.
Correct.
But what we do have is a piece of that, right? So we do have the down payment, is what a lot of people are familiar with. That down payment could be 3, 5, 10%, maybe 20%.
Okay.
But what credit allows you to do is it allows you to use your down payment to acquire an asset that costs a lot more, because the financial institution believes and trusts that you're going to pay them back.
Okay.
So they extend to you, in other terms, credit.
Gotcha.
Credit. So that's the in the gist of it. Another analogy I like to use is credit is your financial reputation. You establish a reputation, in your social life, same way you establish your financial reputation. What have you done in the past that shows whether or not, if you borrow something, you're going to return it or pay it back?
Gotcha.
Your credit history is basically your financial reputation.
And let's make sure people understand, and correct me on this, Ms. Brown, our credit really is our lifeline to everything.
Absolutely.
I mean, at one point, I think even now with things such as insurance, they look at your credit rating, right? I mean, with almost everything you can imagine, the way society has geared it now, your credit is the lifeline to everything that you do in this life. Is that a correct assumption?
That's a correct assumption. Like you mentioned, insurance companies, they look at your credit score.
Yes, sir.
And it can affect the premium that you pay.
Wow. Right.
A better credit score will allow you to pay lower premiums. Why? Because they are assessing risk. Insurance companies, that's the name of the game, risk. So if they feel that you may be a higher risk, they're going to charge you more. Your employer may look at your credit report to see what your credit score is, to determine your character. Again, back to financial reputation.
Wow.
Your landlord, if you're renting, they may look at your credit score to determine whether or not you are a good risk. Are you going to pay on time? Do you pay your other bills on time? So it affects a wide range of things that you do to support your lifestyle.
I hope everyone is taking notes because everything you're saying is so critical and relative to our lives right now. So let's push this a little bit more. And let me just, because we started talking about credit. I know we're piquing people's ears, but now let's distinguish between good credit and bad credit. All right.
Yeah. That's a great question. That's a great question. Good credit and bad credit. There is such a thing.
Okay.
And what it comes back to is what is the proper or the origin of the nature of what credit is supposed to be used for.
Okay.
And the first thing that I mentioned is it's for wealth building.
Mm.
And if you're using credit, you want to use it to acquire assets and not liabilities. The way that I describe assets versus liabilities is an asset is something that will appreciate in value.
Gotcha.
Versus decrease in value. Or an asset is something that will allow you to earn more income in the future, right? So it adds to your life instead of taking away from your life. Credit, bad credit, could be in terms of if I use this credit tool to buy something that's actually going to depreciate, or I won't have it in a few months or a few years. A perfect example is if you use a credit card to buy food.
Gotcha.
Right? That's not necessarily an asset that's going to appreciate or provide income for you in
Correct.
the future. You're going to eat that food and you're going to go on about your day. There's no value added to your life. So using it to purchase things, credit card debt,
right?
Very dangerous, slippery slope to go down, because what you find is using the card to buy things that you want now, it will put you in a position where you have to pay for it later. And a lot of times we think that we're going to have those funds to pay for it later, but there's always a cost.
Always a circumstance.
There's always a cost.
Yes.
So you can accumulate credit card debt that if you're unable to pay it back at the end of the month, then it's bad credit. It's bad credit because the interest now that you're accruing on it is on something that you either have used and you don't have access to it anymore.
Correct.
Or it's something that is no longer useful to you. So now you're paying on something that you don't even use anymore. Now, don't get me wrong. There's a lot of people that can use a credit card in the right way. What do I mean by that? They purchase something and at the end of the month, they pay it off on time.
Right.
So that they're not accruing any interest on it. But Dr. Tatum, I mean, if we're going to be real today, there's a lot of people that can live outside of their means.
Of course.
And there's something about delayed gratification. We don't want to wait for things.
Correct.
So we use credit cards, and it's very, very easy to get into the trap of I'll pay for it later. I'll pay for it later. But that day of later, it never comes.
Never comes.
And that thing that you purchase becomes more expensive to you because of the interest you
and that could be stuff like, okay, I'll go out and buy this new TV, or I'll go out and buy this new furniture. I want this brand new suit, or, my friend's in town, so I want to treat them.
Yes.
And so we take them out knowing already that you're potentially strapped for cash. And you can barely make the minimum payments. And so now what happens when you aren't able, because now the minimum payment has increased because you've accrued this debt. Right. And if you don't meet that on time, then there's a late fee. And oftentimes, like I do, Ms. Brown, that oftentimes most individuals who struggle or just barely make it will pay the very minimum.
Very true.
Not aware of the fact that the interest is sometimes more than the minimum, correct?
Exactly.
Am I talking? Okay.
Yes.
And so even though you paid that $25, the interest on it could have been $30. All right. So now you've still accumulated more debt in the process.
Very true.
And so I think, and I'm sure a lot of people, this is resonating with you because we've all been there before. We've all possibly had that experience. And hopefully this is that Damascus Road experience, meaning hopefully this is the road that will help me get back on the road to recovery. So good credit, bad credit. It is good to have good credit that positions you to do, again, things that will help sustain you and bring wealth into your life. One of the things that I'm sure you've heard of, because I'm sure you've dealt with it in your nearly 25 plus years, is that let's just say that John Smith is about to get married. All right. And unbeknownst to John Smith, he now and his soon to be wife are getting ready to look for a house. And when John goes to apply, he discovers, I can see you can tell, well, he discovers that, 20 years ago, and I don't know if it's only that long, but that somebody used his name and social number. So what does he do in that situation? Is there anything he can? Because that's on his credit.
Absolutely.
Okay. And I don't know how long it stays. So educate us on that as well.
Sure. So if that's an example of fraud, right?
Wow.
His identity has been stolen. Someone has used his social security number, birth date, or and such, so that they can go out and use credit in his name. And now he has this debt on his credit report. It's affecting his credit. One thing that I would say that's very important is that you keep an eye on your credit report. There you can go to annualcreditreport.com once a year, and you can get a free credit report. As a matter of fact, there's 3 credit bureaus, and you can actually request a credit report from each one of those bureaus for free.
There you go.
Once a year. Now, here's where the challenge is. A lot of times we're scared to look at our credit. We're scared to look at our credit score.
I hear you.
There's things in our lives that we'd rather keep under the covers or
understand.
Under the rug. No one's the exception to that.
Don't
rule.
ask, don't tell, don't look at. Just pray it's okay when I get ready to go apply for something. I'm with you.
Right?
I'm with you.
So I don't want to make anyone seem like they're lesser than because of that, because we all struggle with certain things in that realm.
Of course.
But if I were to just plead to people in regards to just pulling those credit reports on an annual basis, because it does more damage than good just to keep your eyes closed or stick your head in the sand without really dealing with issues. So in a case like Mr. John Smith, who someone stole his identity, he can certainly dispute those charges. But the longer it takes, maybe that instance happened 5-10 years ago. It's even more difficult to dispute it.
Wow.
So that's why you want to stay on top of it. If you can pull your credit report at least annually, you can address any issues, any disputes more promptly. And that's important.
As you say that, the thought just occurred to me. Like say there are 3 credit reporters: Experian,
Equifax,
and
TransUnion.
And if you just requested your free report from each one of those once every 4 months, it would give you an idea.
Oh, yes.
Okay. I mean, and that makes sense to do that, because, and it goes a step further, because, even though you check that, I mean, you can check that, 3 times, 4 times a year. The other thing that, as relates to banking or banking accounts would be, you can check your own bank accounts almost every day.
Exactly.
And we know most people don't do that until I had a friend of mine who, again, the Lord bless, well-to-do, but went to his account one day and discovered that $5,000 was missing. Went back the very next day and another $2,500 was missing. Well, at that point, before the bank could actually clamp down on it, which they did give him back his finances, this mysterious entity had taken $7,500 from him. Now, most people may not have that luxury. You might just have just enough in there. But if you put the wrong numbers in, if you send them to the wrong place, et cetera, it's an open door for somebody. So fraud is happening everywhere now.
Yes.
And what are some things that we can do to protect our credit and our money? What are some things that we could possibly do?
So speaking of fraud in the credit realm, you can actually put a freeze on your credit.
Okay.
You can contact the credit bureaus and let them know, hey, I don't want anyone to pull any credit inquiries. What is a credit inquiry? If you go to a financial institution or if you go to a car dealership, they want to check your credit report before they extend financing to see if you can get approved. Well, you can put a freeze on that, and that also puts a freeze on any new credit being extended. You have the ability to also turn that freeze off. So it's something that you have control over, that gives you more hands-on, so that it prevents someone from being able to abuse your credit by maybe potentially stealing your identity. Stealing your identity, that's the bigger prevalent piece to the puzzle.
Gotcha.
Because they can't get to your credit unless they get to your identity. So protecting your identity is so vitally important. And back to technology. We have so much access to different apps and different financial tools. We're online a lot of times. We have to be mindful of some of these games that get played on social media,
Mm.
that they seem to ask you simple questions like get to know you questions. What was the school that you went to? What's your
Uh-huh.
favorite dog's name? You know, all of these different things. But really what they're doing is they're trying to pry password information out of you. You know, they want to know your
Mm.
birthday, what month were you born in, and all of these different things. We have to be very, very careful of what we put on social media, because we are giving away information that we might be using as
Right.
passwords
Correct.
for other things. So protect your protect your finances by protecting your identity is so important. I would also say is be mindful of how many devices you have put your financial information on,
Good information.
because you never know if someone's going to get a hold of a device that you've used before. So if you are switching devices, you want to wipe that information
There
clean
you go.
from the device, so that you don't have devices that are used by other people.
Mm-hmm.
And you don't want to let people use your phone, your personal
Correct.
device, where you may have passwords automatically saved in there.
Mm-hmm.
Protect yourself. The other thing that I would say is we can be tricked by individuals that present to us good quick money schemes
Right.
and
Right.
all of these different things, where it may sound enticing,
Mm-hmm.
but really what's happening is you're being set up to be used, and then you're going to be left holding an empty bag.
Wow.
So a lot of times what we're seeing a lot at the bank is people will get a call or an email with a once in a lifetime opportunity to make some quick cash.
Mm.
All you have to do is cash a check and then send me some of the money, that type of situation. Go open a
Mm.
bank account. I'm going to transfer some money to you. And all you need to do is transfer me a certain amount, and then you get to keep the rest.
Wow.
All of these are schemes that are going to leave the individual, the victim, holding the bag, and they'll be responsible for the loss. They'll
So
be
you're
responsible
on the
for that.
hook for that when that
Absolutely.
happens.
Absolutely.
Wow.
Absolutely. So those are
Wow.
things that we're seeing a lot of. It's very, very prevalent right now in the banking industry, and even with our senior citizens.
Mm-hmm.
So I would speak to individuals that are caretakers, or that know that their elderly family and loved ones may need an extra eye or two to be looking out. Okay, who's
Absolutely.
trying to get you to do what,
Mm-hmm.
and make sure that you're helping them make those types of decisions.
Let's go back. I want to go back to something, because we're talking about credit, and
Yeah.
the more people look at your credit, that impacts your credit too, right? Is that a correct assumption or no?
That is a correct assumption.
Okay, and I just want to make sure that people hear those small things, because the more you apply, that means that impacts your
Mhm.
credit just as well. Now, talk a little bit about what you consider a good credit score versus a bad credit score.
Yes. So we get this a lot. Just inquiring, trying to figure out where you are within it. And I like to talk in terms of ranges.
Okay.
Ranges, right? It says that the average American credit score right now is right around 700.
Okay.
And we know that the range of credit scores is from 350 to 850. 850 is like grade A. There's not a blemish on your credit score, perfect credit. So 700 is about average. But one thing that I like to talk to people about and be mindful of is that average is a spectrum of ages as well. And data will show that the older you are, the more likely that you have a good credit score or
Gotcha.
a better credit score.
Gotcha.
Why? Because you're probably using debt less. The older you are, the more mature you are. So you have greater discipline with your finances and so on and such forth. The younger you are, you may be cutting your teeth. You may be establishing credit.
Correct.
All of these different things. So, if you're younger, you may be kind of in the range of 680. To 720, right?
Gotcha.
If you're a little bit older, you might be 720 to 750, or so. What I like to share with people is the ranges. You want to use that 700 as, okay, that's average American credit score. But if I'm at 680, I'm still within that ballpark range.
Gotcha.
You still can qualify. You're still considered good credit. But if you're looking for okay, what is very good credit, that, I want to make sure that I have a good credit score, so that if I walk into a door, I'm not fearful that I'm going to get denied of a loan.
Right.
You want to make sure it starts with a 7. I would say that, I'll be blunt with that. You want to make sure it starts with the 7. And then anything above that is just your credit score is going to actually help improve your ability to get approved, and with lower interest rates. If
Excellent.
you're buying a car, the higher your credit score, the lower that interest rate is going to be.
And look, we have to come back on the other side of the break. I want to continue this because there again, I need people to get empowered. So stay tuned. We're going to be back in just a quick minute. And we are back, and I'm speaking again with Mr. Numbers, Mr. David Brown, who is Vice President for Commercial Lending, again, for Isabella Bank, and he has been sharing a treasure trove of helpful information for all of America. I wish all of America could hear it. Unfortunately, we're reduced again to Saginaw, Bay City, and Midland. So Bay City and Midland, hope you're paying attention. Saginaw, I hope that you're paying attention. I hope you've got notes. There's been some great information. This is part one of a series of comments and lectures coming over time. We've been talking about good credit. We've been talking about bad credit. We've been talking about fraud. We've been talking about what happens if somebody uses your information. What are some things you can do? We talked about how to get a copy of your credit report. And I like what Mr. Brown said earlier when he said, first of all, don't be afraid. You need to look. If it's bad, you need to be able to figure out a roadmap on how to get better. And so banks are here. We can trust banks. Talk, if you will, Ms. Brown, about what happens if somebody goes into your account unbeknownst to you and takes some of your money. What are steps that we can do? Let's just say, well, you said earlier it's fraud, but talk a little bit more about what we can do if that happens.
So your very first question was, do we need a banking relationship in this day and age?
Right.
And one of the benefits of having a banking relationship is that banks are obligated to protect consumers. You know, that first and foremost, your money is insured.
There you go.
So if something happens to the bank, the federal government ensures that you will still retain your money that you have deposited into the bank.
Okay.
Now, in terms of protecting you against fraud, banks also protect individuals by doing the investigation legwork. So if someone does withdraw money from your account fraudulently, there's measures that they can take to investigate and then allow you to recoup your money. Now, if you don't have that type of banking relationship, but you're using technology, maybe you're using a financial app of some sort, and then fraud happens to you or someone steals your funds, I honestly don't know what those measures are to protect you in terms of, okay, how can I get my money back? My feeling is that you may be left on your own, you know, filing a police report and trying to figure out how to trace to the person that may have stolen your money. So banks are definitely a resource. They're a way of protecting your money, also helping you grow your funds.
Excellent.
If you use certain services and products. But that's one of the essential things, is that banking relationship helps protect your money, and they can do the investigation and recovery when needed.
Now, and I think that's critical for people to hear, that in the event somebody does take it. Now, let's go a step further, because what happens if, which I've heard, and you could talk about this in terms of its frequency. Sometimes individuals say, well, you know, I went to my bank account and I saw there was $2,000 in there that wasn't mine. Does that give them the right to spend it or claim, well, look what the Lord has done? Talk to me about that.
Well, you know, I can't deny if that happened, that would be my first thought, you know, but the answer is no. You know, if by mistake or some error, some funds ended up in your deposit, your account, those truly are not your funds. At some point, the bank is going to reconcile and find out, okay, that money should have gone somewhere else. And, you know, they have systems in place. They're going to figure out where the money went. Right. And if you have spent the money, you're on the hook for it. You have to pay it back. So I would encourage everyone to be honest. You know, if you find a bank mistake, you would hope that the bank makes it right if the mistake was detrimental to you. So in a case where maybe it looks like a blessing from heaven has fallen into your deposit account, get in touch with the bank, inform them of what you see in your account, how it's not money that you've put in there, and allow them to figure out where that money goes, because
Okay.
ultimately you would be responsible for it.
And so that's a financial pitfall that ultimately sometimes we fall into, sometimes inadvertently, and sometimes we see it, we don't do anything, but it could come back to haunt us. So
Yeah.
what are some other financial pitfalls just in general that we should be aware of as just the average American?
That's a great question, Dr. Tatum. What I would suggest to individuals is when you're opening banking accounts, a lot of banks nowadays allow overdraft protection.
Mm,
Okay. And this overdraft protection allows you to, if you're in a store, if you're purchasing somewhere and you don't exactly have the money, it basically allows you to overdraw your account to a certain extent.
Okay.
Maybe it's $250. Maybe it's $500 or $1,000. But the bank, based on your activity over the last, maybe your history of time with them,
mhm.
they have analyzed your account and determined, well, this person will get a deposit every 2 weeks.
Gotcha.
So more than likely they're good to
Replenish it.
replenish that
Gotcha.
overdraft, right?
Gotcha.
But here's the challenge. A lot of times banks will encourage growth and bring in more customers by offering an initial overdraft balance.
Hmm.
And what happens is individuals either take advantage of that, thinking that, well, I'll pay it back or whatnot, but they're really finding themselves in a hole
Wow.
right off the bat.
Wow.
So the financial discipline of not spending more than you have, if you lack that, you're going to find yourself in a hole. And then you're playing catch up.
Hmm.
So that's a pitfall, is you're constantly playing catch up. You've spent money that you don't have. So your next paycheck or the next income that you receive, you can't use it for those future needs. You got to use it to pay back the overdraft.
Wow.
And, I try to share this with individuals. At some point, that's going to catch up with you.
Hmm.
And what you don't want to happen is you don't want the bank to charge off that overdraft balance because at some point you've refused to pay the balance back.
Gotcha.
Or something's happened and you can't pay it back. What happens is if you get an overdraft balance or a negative balance charged off by any financial institution, those records go on a system that all financial institutions can retrieve.
Hmm.
So whenever someone is opening an account at a financial institution,
Mm-hmm.
that bank or credit union is checking the system. It's called check systems.
Wow.
And they're checking to see if they have any charge-offs or any negative activity with any other banks.
Okay.
And they'll determine whether or not they want to open up an account with you.
Wow.
That can be detrimental to you. If you had bad history with one bank, but you're trying to get a fresh start with another bank, it makes it very, very difficult.
Mm.
So I try to warn people, if you got to know your limits,
Mm-hmm.
and you have to have some discipline to make sure that you don't use and then subsequently abuse that overdraft protection. It's considered a service, but it can be a pitfall.
Now, let me throw this out there because we talked a little bit about this earlier, but how many credit cards? I got 20 credit cards. Do I really need 20 credit cards?
Now, that's a great question. I would say to limit your credit cards.
Okay.
I think the more credit card access you have, you're going to find a reason to use it.
Mm-hmm.
So, back to discipline. We got to figure out how to make sure that we are thinking about, why do I need this credit card?
Right.
What's the purpose or the reason for this card? Because if I'm using it just to get a good deal on a sale,
Mm-hmm. Mm-hmm.
well, if you don't pay that back on time, then that sale isn't going to be a sale anymore, because the interest that you paid or the late fee is going to wipe out all of the savings that you had thought you
Correct.
were going to get.
Correct.
So if we're accumulating credit cards and then using them, we're accumulating bad debt. If those balances are starting to go up.
Gotcha.
So you want to make sure that you limit, and I can't give you a number, but you do want to make sure that you limit the number of credit cards.
But now, how do you get rid of them? Because do you just let the company cut you off, or do you just cut them off? And what's the advantage both ways?
So you can ask the companies to close the accounts.
Okay.
And if your willpower, if your discipline isn't strong enough, by all means, contact that institution and tell them to shut the card off, close the account.
Okay.
My suggestion is that you cut the physical card up, pay off your balance,
Mm-hmm.
and leave the account out and
Excellent.
open.
Excellent.
What does that do? It establishes a history of usage. You've used the card, you've paid it off,
Mm-hmm.
and now the account sits at a zero balance, but it stays open for year after year after year. The fact that you have an open account and it has a zero balance is a positive impact on your credit score.
Excellent.
If you do use credit cards, I would encourage you not to use more than 50% of the credit limit.
Mm,
If it's a $5,000 credit card, you don't want to go beyond $2,500.
gotcha.
And the reason being is the credit bureaus will look at high usage, over 50% high usage.
Mm-hmm.
They will look at that in a negative light, and that will impact your credit score negatively.
And so at the end of the day, and again, this is critical for us to understand. So that's one way we can do it. What are some other fundamental things that we should do to either create a healthy financial position or to maintain one?
All right. So I like the way you put it, a healthy financial position,
Mm-hmm.
because, everyone's picture of financial health is going to be different.
Gotcha.
We're not running a race. We all have our own financial journeys, and people are starting in different positions.
Mm-hmm.
So financial goals that I have may be different from other individuals.
Gotcha.
So the first thing I would say is you don't compare yourself to other people.
Mm-hmm.
But I would say one of the fundamental things that we can do to assist us is to establish a budget.
Gotcha.
And that's a cuss word to a lot of people.
It is.
Ooh, but it's one of my favorite words.
I got you.
But establishing a budget is your roadmap. It's your roadmap.
Mm-hmm.
And it's not going to guarantee that you're going to stay within budget every single month.
Right.
But it gives you direction.
Right.
It gives you direction. I use this analogy a lot. We have all had an experience where it seems like we've had a hole in our pocket and that money has just gone somewhere.
Absolutely.
And financially, that can happen to us if we don't have an intentional direction
Mm-hmm.
for our finances. It can feel like it's just floated into the air.
Absolutely.
So intentionality is so important when we talk about setting goals and having a budget. It helps us reach a direction that we have.
Mm-hmm.
Some other fundamental things that I think are important is establishing an emergency fund. Establishing an emergency fund. I would suggest that your initial goal should be 3 to 6 months of core living expenses.
Wow.
Core
Okay.
living expenses, not the discretionary things.
Right.
I know you love Netflix, but if it's got to go, it's got to go.
It's
right?
got to go. Yes.
But your core living expenses, trying to build up between 3 to 6 months, and it's not going to happen overnight.
Correct.
But if you can continue to establish an allocation within your budget of, okay, this money is going to go towards
There you go.
my emergency fund, it's going to save you. I heard a statistic that said that the majority of Americans live close to paycheck,
Wow.
that $1,000 emergency could wipe them out.
My goodness.
It can wipe them out and put them in a detrimental place. So your first goal should be to establish that protection so that that it doesn't impact you in a detrimental way.
Okay.
If you do have an emergency.
Gotcha.
So emergency fund, the budget that helps you with your direction month to month. The other thing that I would say is to create some level of margin for the just in case, the unknowns.
Mhm.
Every month something is going to come
Of course.
up that you're not planning for.
It could be brakes. It could be a furnace. It could
Exactly.
be a window. It could be anything.
Yep. Yeah. So you don't know what's coming, but you can't spend every dollar that
Correct.
you have.
Correct.
So saving for an emergency fund is one thing, but also within your budget, creating some margin for the just in case as well.
Mhm.
And if that just in case doesn't come that month, guess what? We got some extra money to go on and have some fun.
And there you go.
But that margin is important, and it will alleviate a lot of stress that
Mhm.
financial management can
Mhm.
bring.
So, we talk about this idea of a budget, and we know that a budget is great, particularly because it gives you some type of roadmap and idea of what your finance look like and what you can and cannot do.
Yes.
And that then opens the door possibly for me to apply for a loan.
Mm.
So what are the general qualifications, in your opinion, to get approved for a loan that we should all be thinking about?
Sure. So I would say that right off the bat, you want to be aware of your credit score.
Gotcha.
You want to know where you stand. And regardless of what your credit score is, if you have items like collections, charge-offs,
Mhm.
issues on your credit. You want to address those as soon as possible.
Gotcha.
It
Now
will,
address them with the institution or
yes,
okay. So
yes,
you want to tell them before you apply, hey, this is there, but this is what I'm doing about it, et cetera, et cetera.
exactly.
Okay. I just
You,
want to make sure I'm hearing that correctly.
yes, you want to be upfront and honest with
Mhm.
whoever you're dealing with as far as an institution to what you have going on.
Gotcha.
The other thing that you want to do is you want to also be actively addressing those derogatory reports. So if it's a medical collection
Mhm.
or charge off or something, you want to be actively working towards repaying that. And it could be, small amounts, but it
Mhm.
goes a long ways
Mhm.
to show that you're working on it.
Excellent.
So you're not just dodging those obligations.
And banks, when they see you being faithful to those commitments.
That helps.
Okay.
That helps.
All right.
So, addressing your credit, addressing issues on your credit, knowing your credit score is important. Basic qualifications. I'm going to start with the first big number.
Okay.
First big number is 40%. That number is your debt to income number.
Okay. Say that again. I want to make sure people
Yes.
get that.
Debt to income is the percentage of your monthly debt payments. So, if you have a car note, if you have credit card debt, if you have student loans, a home mortgage,
Mm-hmm.
all of those monthly payments, you want to do a simple calculation. You want to divide those monthly payments in a combined manner. You want to divide that by
Mm-hmm.
your total monthly income.
Gotcha.
And that number should not exceed 40%.
Okay.
You will find that most lenders are not going to lend you any more money
Wow.
if you've exceeded 40%.
Wow.
There's some leeway there if there's some exceptions, but typically that 40% is the ceiling. It's the
Okay.
ceiling.
Okay.
So you want to figure out, where am I from a financial standpoint? Am I 25% debt to income, 30% debt to income? And it will give you an idea of how much more room you have. From a standpoint of also basic qualifications, you want to be able to show consistent income in the form of W-2 income.
Okay.
If you have contract work, you want to be able to provide documentation of receiving that type of income. Back to banking relationships, having bank statements
Mm-hmm.
is a great way to self-track. If your deposits come in automatically, you can provide a couple of monthly statements to show, hey, here's how I get paid. You may be getting paid unconventionally, but you're making deposits or you're receiving automatic payments.
Okay.
Your bank statements would be the records for that.
Mm-hmm. Mm-hmm.
That allows you to prove your income. Credit report proves your debt levels.
Mm-hmm.
Then it allows the financial institutions to make sound lending decisions and without really any issues. So if you have a good credit score,
Mm-hmm.
and I'm going to use a range. I told you that 680 is kind of like maybe the bottom line of average credit score.
Gotcha.
But you can still get approved if you're below average.
Okay.
Right?
Okay.
You can get approved for a home mortgage with credit scores as low as 620, 625, as long as you meet some of the other qualifications that they have.
And just so people are aware, Ms. Brown, the feds just changed the interest rate.
The interest rate just changed.
Okay.
Yes,
So
yes.
I want you to talk a little bit more about that.
Yes.
Because I think people need to understand that a window has opened now. I know that housing is kind of crazy and all these other things, but talk a little bit about that as well, because I think people need to see you've been waiting to get a house, but not one at that level. What can we do now about that?
Sure. Yeah. So the feds, they just reduced the federal interest rate by about 0.5%.
Correct.
But it's a big deal because it's been a number of years since they've gone
almost since the
in that.
pandemic or something,
Yes,
right?
yes. So the rates have been going up, and now
Mm.
this is the first time they're starting to go down.
Okay.
And we're experiencing, that I'm sure people are seeing higher credit card interest rates or car loan rates and all of those sort of things. What we'll probably start to see is a little bit of a tick down in terms of our mortgage rates. So yes, it's a great time to inquire again about if you're looking to buy a home or purchase a vehicle.
What about refinancing?
Refinancing. Ooh, we still may be in a range where
Gotcha.
it's not that beneficial yet.
Okay.
You can check, but what we're finding is during the pandemic and a couple of years after that, mortgage rates were super, super low.
Right. I remember
and a lot
that.
of people took advantage of that.
Correct.
To lock in their rates. So a lot of people that own homes right now have pretty good interest rates.
Mm-hmm.
I would imagine that if you've purchased a home over the last year or year and a half, your rate has been a little bit higher
Gotcha.
than what other people have had. I wouldn't say now is a good time to try to refinance. I don't think the rates have dropped enough.
Okay.
But hopefully they will. They'll continue to go down a little bit. It helps the buying power,
Right.
right? If you've been out and you've been if you are in the market to purchase a home, you've noticed interest rates dramatically impact the amount of home that you can buy. The sticker price might be the same, but determined by that interest rate, it could determine whether or not you qualify for that mortgage payment.
Okay.
So it dramatically impacts the mortgage payment. So with rates going down, it may put you in a position to buy a home that you're looking for.
So talk a little bit about, you hear the word a whole lot, but inflation. Can you educate people just exactly what that means and why it is such a big deal in our world now? It's pretty much why we are where we are now. But talk a little bit about that so people kind of get a gist of what that means.
Yeah. Inflation is an economics term, and it really has to do with supply and demand.
Okay.
And then also with the idea that the cost to produce goods is starting to go up. And, a perfect example is your dollar store is not a dollar store anymore. What you used to buy for $1
right.
is not the case.
There you go.
I got a little upset when it was $1.25. I was like, wait a minute, and now they've even gone beyond that. They're starting to offer products for $5 and $10.
Right.
The idea is that things cost more to produce now than they have in the past. Why is that? Well, that's a complex answer, but one of the main drivers is wages. We're paying labor costs at a higher rate than we have in the past.
Gotcha.
And it's almost a chicken and egg situation where once you pay laborers more, you have to increase the cost of goods.
Absolutely.
That in such increases the cost of living.
Yes, sir.
Everything goes up.
Absolutely.
And now the wages that person got an increase on is no longer beneficial to the new cost of living.
Of course not.
So
of course not.
It's a very vicious cycle. But inflation, I'll go back to supply and demand. Inflation goes up as the cost to produce something goes up, right? And what it usually does is if it costs more to produce, then the sticker price on the end to sell to the market goes up.
Absolutely.
So if the supply is low, costs go up. And that will temper people's appetite to buy. If car prices are low, but they're having a hard time producing them at a pace that meets consumer demand, they increase the price, and it slows down people's appetite to purchase.
Gotcha.
So that inflation happens, it tempers the demand as such, and then eventually inflation starts to come down a little bit. The Federal Reserve reducing the interest rate is a sign that they believe inflation is starting to come down because people have slowed in purchasing.
Gotcha.
So now they believe that now supply and demand are fairly close. So that's a short answer, but there are lots of articles and stories about inflation out there.
Well, look, we got to stop here. This is a master class, and part 2 is coming. And so we're out of time. And so again, Saginaw Bay City, Midland. Again, let me pause and thank Mr. David Brown, Vice President for Commercial Lending for Isabella Bank. Let me thank Alpha Media, KISS 107, our handy engineer, Mr. Matthew Lester. Let me thank again Saginaw African American Past for allowing me to air this on the broadcast. And by the way, this afternoon at the NAACP banquet, Mr. Brown is going to be honored as one of our young and upcoming professionals. I thought I'd just throw that in there today. I want to give you this last quote as we get ready to end. It's good to have money and the things that money can buy, but it's good too to check up once in a while and make sure that you haven't lost the things that money can't buy. All right. So, hey, God bless you. Stay tuned. We're going to bring another part of this in the near future. God bless all of you. That's our prayer.